Sacramento is moving toward a mileage tax. A new Democratic-backed proposal directs the California Transportation Commission to prepare recommendations for implementing a per-mile tax on drivers, officially called a road usage charge. The stated goal is to replace declining gas tax revenue as the state phases out gasoline vehicles. But here's the problem. This proposal does not repeal the gas tax, which means Californians could soon be charged twice, once at the pump and again for every mile they drive. In fact, Republicans introduced a constitutional amendment to prevent double taxation, but supermajority Democrats rejected our proposal. And this is happening in a state where drivers already pay the highest gas prices in America. As we start 2026, Californians are paying roughly $1.40 more per gallon than the national average. And a widely cited analysis from USC warns that under certain conditions, California gas prices could reach $8.43 per gallon. This mileage tax proposal is not appearing in a vacuum. It's landing on top of a fuel system that's already under strain. California's gas prices aren't high by accident. The state is losing 17 to 18% of its in-state refining capacity. Phillips 66 is winding down its Los Angeles area refinery. Valero is powering down its refining operations at the Benicia refinery. This refinery will completely shut down by April. That matters more here than anywhere else because California uses a unique gasoline blend that can't be easily imported from other states. When refineries shut down, California can't just buy its way out of shortages. It becomes dependent on ready-made gasoline imported from foreign countries like India. India buys its oil from Russia, blends it, and then puts it on tanker ships headed to California's ports. To make matters worse, what happens when there is a geopolitical disruption? How much pollution is being emitted when tankers are arriving from across the globe? Will our ports be able to handle an influx of hazardous materials? The result? We will have limited inventories and slow, expensive imports. That makes prices volatile and permanently higher. Some experts estimate we could pay as much as $8 per gallon. California operates on a fuel island. It's isolated from major refining hubs, and layered on top of that isolation are policy-driven costs. Federal and industry reporting shows that programs like cap and trade and the low carbon fuel standard add significant cost per gallon before taxes even apply. This isn't a temporary spike. It's a structural pricing problem. California's gas excise tax rose to 61.2 cents per gallon on July 1st, 2025, and it is scheduled to rise again on July 1st, 2026, automatically. No new vote required, but the excise tax is only part of the story. According to a breakdown compiled using data from the United States Energy Information Administration and the California Department of Tax and Fee Administration, taxes, fees, and climate program costs now total about $1.31 per gallon of gasoline in California. That $1.31 includes the state excise tax, state and local sales taxes, the federal excise tax, fees tied to the low carbon fuel standard, costs from the state's cap and trade program, and the state underground storage tank fee. That's before oil prices, refining, or distribution. At the same time, the Legislative Analyst Office warns the state faces an $18 billion budget deficit. So instead of fixing the system, Democrats are preparing a new way to tax driving itself. The mileage tax proposal requires the state to design a per-mile charge, but offers no guarantee the gas tax goes away. That opens the door to double taxation. Even worse, pilot programs have tested tiered mileage rates that charge gas-powered vehicles more while benefiting wealthier electric vehicle owners. That shifts the burden onto working families, long-distance commuters, rural Californians, people who can't afford new vehicles. Republicans are opposed because this isn't reform. It's stacking costs on people who have no alternatives, and taxpayer protections are unclear. If a mileage tax is treated as a toll instead of a tax, it could bypass voter safeguards that normally require supermajority approval. That's intentionally misleading. When driving costs rise, everything gets more expensive. Fuel prices ripple through groceries, construction, farming, and deliveries. That Amazon package will cost more. That rideshare ride will cost more. Costs that will take more money out of your pocket. UC Davis economists estimate refinery closures alone could add $1.21 per gallon by August 2026 if market conditions don't offset the loss. Now add a mileage tax on top of that. That's not climate policy. That's a cost of living hit. Democrats say the mileage tax is about planning for the future. Republicans see it for what it is, another sign of mismanagement, out-of-touch policy, and a refusal to confront affordability. California already pays the highest prices in the nation. Now Sacramento wants to charge you by the mile. This didn't happen overnight, and it won't stop unless you join us to draw the line.